What the heck is going on with the employee retention tax credit? I'm here to help you find out. So before we get started, what is the employee retention tax credit? I'm sure you've heard of it. I'm sure you've received a lot of phone calls over the past few years from companies saying that you qualify for free money up to $26,000 per employee. And that is actually part of the problem of what's going on with the ERC. The ERC was created during the pandemic to help provide relief to businesses who were struggling. This was going concurrently with the PPP loans and all that. And as more laws were passed to make the ERC more favorable, obviously the chances of fraud skyrocketed. Now, the ERC was supposed to provide businesses with up to $5,000 per employee in 2020 and up to $21,000 per employee in 2021, which is why you get the calls for $26,000 per employee. Now, the key word there is it is up to $5,000 and up to $21,000 per employee, because there are many things that you have to qualify for in order for that to happen. And a lot of times only a portion of that employee's wages would qualify. So most of the times, if you did the actual due diligence and the actual testing, you probably wouldn't get the full amount per employee. Now, so what's been going on with the fraud and all of that nonsense? So since the laws have passed to make it more favorable and more easy to claim for employers, there have been tons and tons of companies out there being created specifically to help businesses claim these credits. Now, you might think that's a good thing, but not quite, because these companies, a lot of times, they don't take any of the qualifying factors into account. They just claim the maximum credit for the businesses, and then they're happy, the businesses are happy because they get paid the ERC money, and these ERC mills is what I call them. They get paid on a percentage of the amount of credits that they get for these businesses. So that's called a contingency fee. And if you've seen any of my videos, you know that contingency fees in taxes and in accounting are highly unethical, because it just would incentivize the professional to get you the largest refund, the largest credits, the biggest outcome possible, even if it goes against tax laws. So that's what's been happening. Like, these companies were claiming these huge credits for these businesses. These businesses were getting paid from the government. And because of the process, the IRS was just paying this money out without really doing much further checks. Really, they should have been doing it on the front ends before paying out this money. But, it was so easy to claim the money and so easy to get paid that businesses were getting paid this money without any further checks. You just file a form. Basically, you amend some tax returns and file a form. You submit it to the IRS, and then they just send you the money. There might be some mathematical corrections here and there, but overall, they send you what you requested. Now, at the beginning, that didn't seem like a big problem. That seemed like a weird Willy Wonka gold mine of money. But, now we can see why that's a huge problem, because obviously the IRS gets wise to these schemes, and they start punishing people who obviously facilitated in running the ERC mills, and also they're punishing the business owners and the businesses who played a part and took part in the scheme as well. And as we all know, in tax law, or in most laws, most legal cases, claiming ignorance is not a proper defense. So here's what's going on right now with the ERC due to this fraud. The IRS has put a pause on processing new ERC applications, and they're taking longer to process applications that they already had in queue. And the ERC already took 4 to 6 months to pay out, and they would usually pay out tens of thousands to millions of dollars. But now each application is being reviewed a lot more closely and investigated further if needed. Okay, and so the IRS is trying to find erroneous applications and erroneous claims for these credits, and they will actually be penalizing and fining the claimants of these credits. This all came down in a couple IRS announcements late in 2023, stating that they will stop processing new claims, and they will be investigating further current claims, and they will probably even be investigating claims that they've already paid out in the past to make sure they're all legitimate. So if you have participated in the ERC program, don't be surprised if you get notices for further information or audit requests or anything like that. There's also a bill that's passed the House that may limit the claiming of the ERC via a deadline. So, claiming the ERC historically has been filing an amended tax return, and amendments usually have a 3-year deadline. But the House has passed a bill that would potentially put a deadline on all ERC claims as of January 31st, 2024, which obviously at this point in making this video has already passed. The bill hasn't fully passed and became law yet, but that's just something that the government is trying to do, is just to halt and stop this program altogether. Otherwise, you'd be able to claim the ERC up for another year. So this would be putting a very early halt on these claims. Now, if you think you've been tricked or fallen victim to some of these ERC mill scams, or if you have erroneously taken too much of the ERC money because you felt greedy or because you didn't know what you were doing, the IRS has actually offered a way out. So if you've already been paid the ERC money, the IRS has offered you a way to pay it back if you suspect that it was done incorrectly and that you got too much of it. If you filed a claim for the ERC and you have not been paid yet, the IRS is also offering you a way to withdraw your claim completely and not be considered for processing. Now, obviously the ERC is a legitimate program and can be really useful for businesses to legitimately help them if they were struggling. But with the rampant fraud and the rampant amount of ERC mills out there preying on businesses, they would just want to give taxpayers a way out, just in case you suspect that things were done incorrectly, or that you may have gotten more than you should have, or claiming more than you should have. Just if anything doesn't feel right, they're offering you this way out so you don't get penalized and fines later. And that's potentially civil and criminally fines. So what are some signs that you might have fallen or might have been taken advantage of by one of these mills? Well, first is if they required a contingency fee, like a 20%, 30% fee of the ERC amounts that they're going to get you. That is one big red flag. I'm not saying that it's for sure a scam if they requested that, but that is a major big flag because that's quite unethical. Another thing to look out for is if there was no or very little due diligence done on your company and your employees. Okay, if there was not much done, then that means the company that did the ERC claim for you probably doesn't know enough about your company to file a proper claim. And so they don't know enough about your employees, about your operations, and so they have no business filing a claim for you. That's another red flag. A third red flag is if they refuse to sign the bottom of the 941 amendeds, the filing to claim the ERC. If they refuse to sign the bottom or put their company name at the bottom, that is a major red flag. Okay, that means that it's what I talk about, ghost tax preparers who claim these huge refunds, who refuse to put their firm name and their own name and identifying numbers at the bottom of the tax return. It's because they don't want to get busted. They don't want these things that come to be traced back to them. So that, I would say, that is the biggest red flag of them all, because if there's a company that refuses to do that, then there's something fishy going on. And the last major thing is if you suspect that the claim was for the maximum amounts for each employee, it is, I would bet on it that is likely fraud, because there's very few instances where a company has the maximum amount claims for every single employee for both years. So for 21 and for 2020. So if that was the case for you, that is a huge indicator to me that, one, not enough due diligence was done, and two, it's a bunch of bullshit and they're just trying to get as much of your money from you by getting you as much money from the government as possible without considering any of the numerous qualifications that have to be checked with your case. All right, that's all I got for today. Thanks for watching. If you're new here, please definitely smash the like button and consider subscribing. And if you're rewatching this or if you're a current subscriber, thank you for your support, and I'll see you next time.
They act like they know. Guess I gotta hit them with an update. Okay. I been getting to it when I'm up late. Hit it when you went the front gate. They act like they know. Hold up. Guess I gotta hit them with the update. Really with it, I ain't got a pump fake. Killer flow and hit them with the one take. Act like they know. Guess I gotta hit them with the update. Okay. I been getting to